So do you know that you could become wealthy starting at investing just $1 every day? You know, the average Joe out there who is behind or hasn't even started investing for their retirement is likely overwhelmed by the prospect of having to invest hundreds of dollars on a monthly basis for the next 15, 20, or even 30 years. But the truth of the matter is, the biggest reason why people succeed and why others fail is their ability to invest consistently for the long term. In this video, I'm going to show you how you can start investing for just $1 every day, and then over time increase that amount and absolutely achieve your retirement goals. Okay, here's the spreadsheet that I built out for this video. Essentially what we're going to do here is invest in the S&P 500 ETF, ticker symbol SPY, which has been in existence for the past 30 years. And we're going to look at the actual results, the actual price changes day over day, and the actual dividends received from owning this investment for the long term to see what our results would actually be if we started investing at just $1. Just $1 every day. Now, to be clear, we can't just invest $1 every day for the next 30 years. Just the $1 every day and have any realistic chance of meeting our retirement goals. However, we can start very slowly and eventually build over time to a much more significant number that we all have a much more realistic likelihood of achieving as we get further into our careers. The specific time frame we're going to look at here is starting in May of 1994 and all the way through May of 2023, so technically 29 years. And what we're going to do on a daily basis is invest $1. And we're going to include the weekends here. So you'll notice on certain days, here on Mondays or Tuesdays if there's a holiday, we're going to catch up those extra dollars from the weekend. All the dividends earned from owning SPY during that time frame will be paid out, and we will reinvest all of those dividends. And these two columns here right over to the side are the value if we did not reinvest dividends and if we did. This is the true number that we're concerned with right here though. So this is just $1 a day in year one. And so what this is going to model is if we invested not just $1 a day every year, and then you might have guessed it here, $2 a day in year two, and then $3 a day in year three, and slowly building up to a more significant number. And you'll notice here, as we look at the monthly and annual contributions here over year over those 30 years, or 29 years really, you start at a very small number here. Let me just show you the table right here. In year one, you're only contributing $365 total for the year, which equates to about $30.42 on a monthly basis. And then in year two, it's only $60 a month. And then year three, $90 a month. And it really gives you a very soft beginning where even if you don't have a lot of money to invest on a daily or monthly basis, you can still get started here. And it doesn't even become a very significant number until year 5 or 6. And even at the very highest number here in year 27, 28, 29, 30, $800 a month, I know is a big number for sure for the average Joe. However, these are the prime earning years. This is when, of all these years, you would have the most likely chance of being able to invest this number right here. So let's take a look at the results here. What is possible if we start investing just $1 every day into the S&P 500 consistently over time based on actual historical data, actual price changes in the S&P 500, and actual dividends paid? All right, here are the results starting back in 1994 or in year one. Notice here in the beginning, after the first 5 years, the blue line, by the way, is reinvesting dividends, and the white line, or very light blue line, is if we were not reinvesting dividends. And you'll notice, by the way, these lines are very similar here, and that's because the dividends are not making any meaningful difference because they're so small, since our balance is so small. But in year 5 here, after 5 years of investing, $1 a day in year 1, then $2 a day in year 2, then 3, 4, and 5, our balance is only $9,000. And honestly, this would be the time frame where I think a lot of people would say, you know, what's the point here? I've only got $9,000 after 5 years, and maybe I just take that $9,000 and do something else with it, maybe that's more important in our lives at that time. But that's a mistake because we are building a foundation. So here, 5 years in, we're at $9,000, and this is really the point of despair, I think, for most people here. We fast forward to year 15, okay? We've already invested through the dot-com bubble right here. Okay, wasn't a big deal because we had a very small amount of money. And then we just went through, in year 15, we just experienced the housing crisis. And we had about $52,000. But at the very low here, right as we're building out of 2009, we only have $38,709 after 15 years. Year 15, right here. Our balance is $39,000 by reinvesting dividends. It would be $35,700 if we were not reinvesting dividends. But this is the number I want to call out right here. Total contributions. We've invested now into this portfolio $43,808, but our investment is only worth $39,000, and that would be disheartening. However, this is the reality when investing over the long term. Our investment balance is always fluctuating, up significantly at times, down significantly at times. And I know there were a lot of people in 2008, 2009, especially those that were closer to retirement, have their balances in their 401k, their IRA, etc., just crater, and that was disheartening. In fact, many people were so scared they were just, I'm gonna get out of the market. And that was a mistake, as we saw. Fast forward from year 15 to year 25. And now, in 2019, our balance has gone from $38,709 up to $290,000. And it's a combination of, yes, the market rebounding from these lows, but also investing more money over time and staying consistent. And then all the way to year 30 here, retirement time, right? Or technically year 29, we hit a high right around here, which was $539,000. However, 2022 was a down year, so we come down here to where we ended here in 2023, $500,000. After 29 years, our total investments, how much money we put into the account, was $158,000. However, our investment balances were $389,000 if we did not reinvest all dividends, and $500,000 if we did. And I think for the average Joe out there, if you knew you could retire after 30 years with $500,000, you'd be happy. Here's an article out of CBS News. It says here that most baby boomers think they need $1.1 million for retirement, but the reality is the median retirement savings is only $120,000. And 1 in 5 people over age 59, those definitely nearing retirement, do not even have a retirement account, which means they're relying solely on Social Security retirement benefits, which is not going to move the needle for them. So $500,000 when it's time to retire? Absolutely, especially when you're able to combine that with Social Security retirement benefits. So if you're an average Joe out there and you know that you're behind, maybe you've not saved any money at all, just start. Start at $1 a day. Make it a goal to save $30 this month. Just $30. And then try to increase that over time, because as you can see, historical data shows you can start small, grow over time, and be just fine. Hopefully you found some value and some inspiration to get started here. Make sure to leave your 2 cents in the comments below. It's my goal to respond to all comments left on the day I post a new video. That's all I got for you guys in this video. Have a great rest of your day, and thanks for watching.